As a lot of these charts, Kevin, just don't have direction, and it's been making it very hard to trade. At this point, I just kind of want us to either break down or break out. At this point, the back and forth is killing me.
Good morning, Oliver. I was wrong, Oliver. I said that Monday was peak uncertainty. Well, this is the Mount Everest of uncertainty going on right now, as the overall rhetoric surrounding this market right now is just pure panic. And you're seeing it show up in the risk-off assets. You're seeing it in bonds. You're seeing it in VIX. You're seeing it in some of the other risk-off trades. So the good news is we are getting some hard economic data that's, again, showing some promise. ADP was pretty solid at 155,000 jobs. Mortgage apps. 30-year mortgage from 6.71 to 6.7, not very much of a move, but purchases up another 1.5%. Refi is still struggling here with rates kind of tapering off, so the overall composite was down. But for the second week, with rates either flat or higher, purchases are still positive in terms of mortgage apps. That's, I think, relatively good news to extract from the mortgage apps data. Now, in the ADP data that we got today, pretty solid numbers across the board. Small businesses, 42,000, 1 to 19, 20 to 49, up 10,000. Positive numbers across the board in terms of the size of business. 59,000 companies 500 or higher. So large companies adding to the labor force. If you break it down by sector, the biggest ones, professional and business services added 57,000. Financial, 38,000. Manufacturing, up 21,000. Leisure and hospitality, a solid 17,000. Oliver, none of it matters today. This market will be overwhelmed by speculation and consensus about what these tariffs will mean and what that means for the overall economy going forward. Just remember, we don't trade the economy, we trade the stock market, and sometimes those are two different things. But right now, Oliver, there is unbridled uncertainty going on right now and speculation about what this is going to do to the economy, and of course, speculation about worst case scenarios, which always happen in financial media and the markets. And so that's what we got to deal with. And Oliver, I'm going to make a statement to you. The consensus right now is overwhelmingly bearish. And when's the last time consensus was right?
Yeah, sometimes it is. It takes consensus to move price. That's kind of price action, sort of the bedrock of technical analysis, people moving charts in one direction. But I hear you. The part that I still have some difficulty with, though, so there's uncertainty in terms of trying to understand how this impacts the economy. It's pretty hard to model. A lot of economists have just basically admitted to that. I feel comfortable saying that since Campbell Harvey came on from Duke and said, it's very hard to figure out what this is supposed to mean for the bond market. But in terms of preparing, I think that most people, if they are analytical people, try to model for the worst. And so after 3 weeks of this, I just can't imagine how we haven't modeled for some of the worst outcomes. And so at that point, I just feel that the potential impact of this from a negative perspective has got to be getting worked through. That's why I don't like to see the dollar down this morning, because one of the main things that I'm looking for is dollar stability to tell us these tariff outcomes are getting priced in. And the dollar has been stabilizing. What are you looking for, Kev, to kind of gauge whether or not we are getting our head around this? Because I would think at this point, everybody should have modeled a lot of possibilities. I don't know how there could be surprise.
Yeah, I mean, here's the most important thing, Oliver, I think today, is uncertainty, rampant, peak uncertainty. If you're in favor of this market, you want some level of certainty, right? I think that's what I've always said, put a number on it, right? Good news or bad news, the market likes when you put a number on it. If this market goes from peak uncertainty to less uncertainty, then we're okay. Then the market will consume, digest it, and move forward with hard economic data that we're going to get Thursday and Friday. But right now, we're not there. We're at peak uncertainty, and then that leads to, like you just mentioned, worst case scenarios being planned out, and that's where we are right now. Will that get better as the day goes on? Probably. Uncertainty will come down off its highs, and that's what we're probably going to get today. Does that mean the market rallies from here? That's the question. But boy, traders like when uncertainty gets less uncertain, Oliver, and I think that could bring in dip buyers or firming up. Remember, we've opened down every day this week.
Yeah, I was just about to say,
rallied
that's
from
been
there.
good.
Let's see if this is day 3.
That to me reflects uncertainty becoming more certain, because the overnight baseline of selling reflects that kind of fear, but then the buying up in the session. So even though it took some really nasty downside Friday and Monday for us to get to that point, I do think that's been encouraging here the last 2 days. Though the bond market really is, where the 10 to the 3-month rate is inverting pretty steeply again. There's just a lot of messages from bonds that are saying this is going to get worse. And I don't know if that has to be tariff related necessarily, because we do have economic data. We've got employment on Friday. We got Jerome Powell. I mean, he's generally been pretty soothing to markets. Later this morning, factory orders, that's kind of our main economic print. But then Thursday, Friday gets super busy. So, this is just the middle of the week here. I feel that there might be just as much uncertainty kind of with the job situation at this point as there is with tariffs, honestly.
Think about what's going to happen, Oliver, between today and the end of the market on Friday. You're going to get, hopefully, less uncertainty about tariffs. You're going to get a non-farm payroll number, and then you're going to get Jerome Powell, the 1-2 punch on Friday. And as I say a lot on this network, Jerome Powell historically delivers information to the market that they like. And if Jerome Powell can take all the information that he's got between now and the end of the week and make a clear message from an FOMC perspective, the market's going to feel less uncertain, Oliver. And less uncertain always leads to bullish.
VIX right now peaking out this morning again. But, we were at VIX 30 in the depth of the selling last month. So that kind of our line in the sand. Maybe we have to retest that. But, boy, I just am not sure that I'm buying the notion that we are at peak uncertainty. I feel like that was maybe a couple of weeks ago. I got to be honest. I know we're at the end of the whole thing, but, we've gotten more information and ideas to model out here as they've thrown out more numbers the last 2 weeks. So,
the good news, as this uncertainty keeps unfolding and more news comes out, the economic data is coming in fairly solid. You can't really argue with some of the economic data. It's all the
market bonds hated yesterday's
coming from the economic data.
Bonds hated something in manufacturing yesterday.
I just think the market is in a little better place than some of the worst case scenarios are playing out. And so I think what we're going to see between now and the end of the week is less uncertainty, Oliver. Now, you're right. The risk off assets, I'm looking at VIX 23.5. I'm looking at gold up 0.5% today. I'm looking at the bonds. Bonds are rallying. Yields now 4.11%.
Yeah.
All those are telling you that there's uncertainty out there.
Right.
So,
yields plunged yesterday on the manufacturing ISM.
Let's see what happens
jolts
throughout the day.
Yeah, so it seems like they plunged on the economic data, and maybe this tariff thing is a big distraction. I appreciate it. Thanks, Kev. Bond market absolutely hated yesterday's economic data, so that puts more pressure and uncertainty, I think, on the economics.